Hi, I'm Julie Kenya with Stock and Options Solutions, otherwise known as SOS. SOS is a leading stock administration, staffing, consulting, and outsourcing firm within the equity compensation marketplace. We provide interim and permanent placement, expert project resources, and total outsourcing solutions. Here at SOS, we developed a tool that allows us to provide clients with volatility output that is used for equity compensation valuations. Private companies, newly public companies tend to need volatility determined on a peer group basis since they have little or no trading history. Today, I will share with you the process and the output of this tool, SOS Volatility application. Of course, we have our little disclaimer, which I'll share with you. And we always like to remind everyone that before making any changes to their equity compensation practices, they should seek professional counsel and auditor and advisor support. How does the process work and what's provided? How does SOS process volatility? First of all, we ask our clients to complete a client questionnaire, the SOS Volatility Client Questionnaire, that gives us a lot of key information about your equity programs and practices. Then we require a volatility input file be provided to us that contains some key information that you're looking for. In particular, the stock ticker symbols, as of dates, and of course expected terms. We then upload your client data into our tool, and the output reports are generated and reviewed by SOS. And then once we have everything reviewed and we're confident that the output is what we would have expected, we would then provide that to you via a secure file transfer. So what does this application or the SOS Volatility application actually provide? Summary reports, audit reports, data to help you in your volatility accounting memo preparation, as well as time since you are free from doing this and we're doing it for you. So let's talk about the input and the output. There's a number of pieces, and I'm going to go into these in detail. This is just a quick snippet of what we ask of you and what we provide back. So let's take a look at what those are individually. Let's look at the input file, of course. So the first piece is the input file that we ask you to provide after you've done your questionnaire. And this will allow you to provide us with your peer company detail, the names, the ticker symbols, and any weighting that you're applying to the volatility creation. As of dates, this is the date of grant in some cases, or it could be the offering period begin date in an ESPP. And you can give us multiple as of dates, by the way. You can give us one, as in the case here, or you can give us multiple. Expected terms. Again, this is the term of the volatility that you're looking for. And this, again, can be either in 0.5, 1.5 years, 0.25, whatever you need to provide to us in all numbers, or actually numbers and decimals. And this, again, you can provide us a number of expected terms for us to complete the volatility. All right, once we have that in place and we have reviewed it and we feel confident the data is accurate and there doesn't seem to be any formatting issues, we will then upload that into our tool and process the output. The output, as you can see here, involves or includes the detail for each ticker symbol that you provided to us. So this is the ticker symbol, the as of date, the market dates, and the various stock prices over the length of period that you've asked for. So we get one for each one of the ticker symbols. And then we have an intermediate summary page, which provides us a little more detail about summarizing all of the detail in those ticker symbols, and then the volatility all report. And this gives you the ticker symbol, the as of date, the expected term, first trading date, the history available, history used in the volatility calculation, and then the volatility calculations. And you can see here, I wanted to point out that in the case of a stock like Facebook, where you are asking for a 6-year expected term, if the company's only been trading for a shorter period of time, in this case 4.22 years, that's all the history that's available. That's what history is being used to calculate the volatility, not a full 6 years, as in the case of like a Google here, where we're getting 5.9986. That's just because of rounding, but you can see that the full term is being used in a stock that's available versus a stock that's not available. And I would point out that if you have a company stock that you're looking for, or a peer group stock that you're looking for, and that stock no longer exists, let's say you used it in a volatility calculation 3 years ago, that peer group may not exist today. If you provide us with that ticker, you will end up with 0 data. And that happens occasionally when companies are acquired and the client forgets to remove that from the list for us. All right, so that's the detailed output, and then of course there is the summary page, and this is rather small because there's just one expected term and one as of date. But if you had multiple, this would be a bigger chart. And so that's your summary data page. I hope this has been helpful. If you have any further questions about our volatility application, feel free to either send us an email at info@sos-team.com or possibly call us at 888-SOS-0199. Thank you.